All right. So your business cash flow describes the amount of money coming in and leaving your business over a certain amount of time. Now, in addition to helping you meet your current financial obligations, understanding and managing your cash flow helps you to plan for the future, to seize opportunities for growth, and to make sound business decisions. So let's talk about cash flow, profit, loss, and your balance sheets. Disclaimer: the information contained here has been prepared by Civitas Strategies and is not intended to constitute legal, tax, or financial advice. The Civitas Strategies team has used reasonable efforts in collecting, preparing, and providing this information, but does not guarantee its accuracy, completeness, adequacy, or currency. The publication and distribution of this information is not intended to create, and receipt does not constitute an attorney client or any other advisory relationship. Reproduction of this information is expressly prohibited. All right, so in today's conversation, we will explore what cash flow is and why it's important to you and your childcare business. So, we will also learn what financial information you need and how to, let's see, financial information you need and how you can get started. All right, so it looks like we have a small technical difficulty. So, I want to make sure that everything is working properly. So I'm going to take a small pause and make sure. Let's see the recording. Thanks. Oh, Emily, I am on the today's conversation slide. Give me a thumbs up or thumbs down if you are if you're not able or able to see where we are. All right, perfect. All right. All right. So we can go ahead and continue. Hopefully everything has been worked out. So let's talk cash flow versus profit and loss versus balance sheets. So a cash flow statement shows the actual inflows and outflows of cash, while a profit and loss statement is going to show the revenues earned and expenses incurred during a period, regardless of when cash is received or paid. Right. And please be sure to send me a message in the chat. Um, thank you, Margaret. If and Emily, please be sure to send me a message in the chat if you are having any additional technical difficulties. All right. So the balance sheet. Hi, Kimmy. The balance sheet is the state of your business on a given date. It lets you know how healthy your business is, um, since it shows you the picture of your revenue, but debt. See, and how much your money you are taking in and out of your business. Okay, so I'm going to pause for a moment. Margaret, can Emily is having some of our providers are having difficulty seeing the slides changing. Um, I am not 100% sure.
Lena, I'm seeing your screen as like your desktop view rather than your presenter view.
Oh, okay. So let me stop my share for a hot moment and make sure that that is the way that we intended things to be. Let's do it again. Share my screen. Let's go here. This from the current slide. All right. How's that looking?
Go ahead and just enable your share one more time.
Okay. It's interesting because it's not doing that. So let me escape. Choose this cash flow and share. Okay, are you seeing my slide?
I do see your slides, yeah. And then
Okay,
there we go, Marlene, we got it.
perfect. Thank you so much. Let me
Yep.
get to the slide that we're on. Thank you so much, Margaret. Let's see. I think I might have went a little too far. Okay, so we'll go from here. How's that? All right. So for those of you who are joining us late, this is perfect. So let's talk cash flow versus profit and loss versus balance sheet. So a cash flow statement is going to show the actual inflows and outflows of cash, while the profit and loss statement is going to show your revenues earned and expenses incurred during a period, regardless of when cash is received or paid. So your balance sheet is the state of your business on a given date, and it lets you know how healthy your business is since it shows you a picture of revenue, debt, and how much money you are taking in or that you are taking out of your business. So cash flow is different from your monthly budget. Once you have a monthly budget, you may still have questions such as, how much am I making over time? Or um, will I have enough cash to pay myself or to pay my bills? And how much am I really making? So, if you have any of these questions, learning about cash flow can definitely help you answer these specific questions. Now, the cash flow forecast is one of the best tools that you can have for understanding how healthy your organization is in the near term. Predicting cash flow is not about budgeting, it's about understanding how much money you are taking in minus how much money is going out. So, the challenge with cash flow is that you may have a lot of money that's owed to you, but if you don't have the money on hand to pay your bills, then your business can find itself in some financial trouble. So knowing how much cash that you have in the near term becomes a way of not only knowing what's coming in and going out, but also giving you a heads up about any upcoming challenges with having enough cash available. Let me put my chat to make sure I am keeping track of that. Perfect. All right. And then we will have a Q&A towards the end of the session. So if you have those questions, feel free to drop them in the chat. Um, and we will address those when we reach the end of our webinar today. So why is it helpful to forecast your cash flow? Well, as previously mentioned, predicting cash flow is all about understanding how much money you are taking in minus that money that's going out of your business. So here is a sample or a simple 5-step process that will help you to develop a cash flow forecast. So step one, you want to gather your documentation. To do that, you're going to pull 2 to 4 months of documents that show your income and expenses. Now, here is a list of documents that can give you the information that you need. So documents that show your income and expenses are going to be bank statements, credit card statements, Venmo or other transactions of that type, utility bills, and other records of ways that you receive or spend money. So try to use actual amounts when possible for greater accuracy. And if you don't have actual amounts for everything, it's okay to use an average. For example, you might need to use your average electricity bill because you don't know exactly how much electricity you'll use over the next few months. Step two is to pick a time frame and a scenario. Now, this is not a budget. Try to choose a time frame that's long enough to allow you to make decisions beyond 1 or 2 months, but short enough in case challenges or changes happen down the road. Now, we think 6 months is a good time frame, but you should adjust as needed and choose what works best for you. But try never to use more than a year. You should also consider scenario planning, which can help your organization generally, but particularly in times of great uncertainty. So, through scenario planning, you can articulate changes that may happen over time so that you can see and plan for your potential impacts or those potential impacts. So, those uh, you might you can use any number of scenarios. There are some typical scenarios. Typically, we use about three, and those are the best case, the base case, and the worst case. Now, best case scenario is where your revenue and expenses shift to ease the stress of your business. The base case is usually status quo, and that is if the future pays out as you currently expect it to happen. And your worst case would be where your revenue and expenses trend in ways that could happen or have a negative impact or result in a more difficult position for your business. Now, step three is to list your income. You want to categorize the money that comes in each month and be sure to always include what we call an other category. And some examples of income categories would be subsidies, fees, grants, or any other things that fall into that category as income. Step four is going to be to list your expenses. Now, you're going to want to categorize money that goes out each month. And again, be sure to list an other category if you have them. And here are some examples of things that you would list in the expense category. Now, that would be your personnel, taxes, rent, utilities, your vehicle that you use for business, a phone, food and snacks, cleaning, loan payments, bank fees, and various other things. Step five is going to be to review the trends. Your total cash flow over the next 6 months will be the total amount of revenue minus the total amount of your expenses. Now, you can also see the cash flow for each month by subtracting your total expenses from your total revenue month to month. Now, looking at cash flow month to month can be helpful because some months your revenue might be less than expenses, and then other months it might be more. And this is going to tell you where you need to save money from month to month or one month to another. Perfect. So now let's discuss the profit and loss statement. In its most basic form, the profit and loss statement shows the profitability of the business for a set period of time. Now, the time period can be for the year, quarter, month, or even a day. Whatever you need to understand is what it's going to be. So profit is how much you are making from the business, and loss is how much you are losing from the business. So you calculate your profit or loss by taking all the revenue, and that is how much you took into the business in that period, and then subtracting your expenses. The result is either a profit when your revenue exceeds your expenses, or it's going to be a loss where your expenses exceed your revenue. So now that you have cash flow projections in mind, you should ask yourself a series of questions for each scenario to understand the trends that appear. Ask yourself, are you profitable? Are there months that are feast or famine? Which month has the highest profit and which month have the lowest profit? Which categories are your highest expenses? Which categories have your lowest expenses? Which categories have the highest revenue? And which categories have the lowest revenue? And this is going to help you to make further projections. So if you've completed an analysis and you find that you need to cut some expenses to increase revenue, here are some suggestions on how to improve your cash flow. The first is to increase enrollment. Now, if you have room in your program, this can be the most cost effective way to build revenue. So start by asking your current families if they know of other families in need of care who they could potentially refer to you. Also, you could reach out to the Child Care Resource and Referral and other providers to find out if there are families who also need your care. The next way is to try and speed up your billing and collections process. Now, you should bill as soon as possible and don't let money that is owed to you wait. It may be a difficult conversation with families, but the cash is critical in keeping your business alive and the services that they rely upon. So consider maybe if you have not, if you don't have one of these already, consider childcare management system that can help speed your billing. Also, it may cut other costs by using platforms such as Venmo or similar apps to help with fast payments. Another option is to have the parents pay before services are rendered, and that is highly, highly recommended. Our next suggestion would be to consider a weekly versus monthly billing. So if you're currently charging, let's say, $1,000 per month, most people assume that works out to $250 a week, but some months have 5 weeks, which translates to an additional $1,000 per year per student. So this method can be an effective way to increase your cash on hand if you have families who consistently pay on time. Now, if you have families who often miss payments, this can be difficult because it may mean chasing down your money. Now, it can also mean more trips to the bank and more data entry on your end. Yes, I see there's a comment about caps uh, in the chat, which we will get to that. The next suggestion that we have for you is to find best prices for toys, materials, and equipment. So buying used toys can definitely save you significant amounts of money, and you can use sites that give you access to high quality, pre-loved items. So you may want to check out your local Facebook selling groups. You can also look at Goodwill and the Salvation Army. They often have toys available and sometimes supplies. Try visiting these stores early in the week after those items have been dropped off over the weekend. So try using a credit card too for business expenses that have rewards in the form of cash back or gift cards that you can utilize for additional purposes. In addition, you want to look for ways to get discounts through large purchase programs like the ones available to NACCE members. Our next suggestion is to look for recurring subscriptions to cut. This is a very big one, and I found that a lot of providers have found plenty of things that they can reduce in this area. So take a look at different services and online memberships that you have. Often they accumulate over time, and we don't even realize how many we actually have or the impact they have on our monthly cash flow. Determine which subscription you need and which you can live without. Our next suggestion would be to consider federal programs. Now, there are two federal programs that could be claimed retroactively for activities from March 13th of 2020 through September 30th of 2021. We are talking about the Families First Coronavirus Response Act, or FFCRA, which can provide you with payments for staff members who are at home caring for themselves or for family members with COVID, or for children who are not in care or school. And then there's the ERTC, which stands for the Employee Retention Tax Credit. And this is for small businesses that have had a reduction in revenue or had to follow social distancing orders. Now, both programs can provide significant funds for childcare businesses in past activities. And then our final suggestion would be automation. So you want to look for ways that you can stretch your time and your staff's time through apps and other programs. So a childcare management system such as Alliance Core, ELV would be that abbreviation, that can help you with billing, attendance, and other functions. Leg Up is another one, and that can manage your wait lists and reduce the time that you may um, have open spots in your program. Online systems like Gusto or FreshBooks can help you with your payroll and bookkeeping, and even free programs like Google Docs. Those can be used to collect attestations or other forms online. Now, as a recap, in its most basic form, the profit and loss statement shows the profitability of the business for a set period of time. The time period it can be for the year, the quarter, the month, or a day. So is much profit is how much you are taking in from the business. Loss again is how much you are losing from the business. So you calculate the profit or loss by taking all the revenue, which is again how much you took in for that period. And then you subtract your expenses, and the results will be either a profit or a loss. So if we take a look at the example on the screen, we had $55,000 revenue in quarter two and $47,000 of expenses. So that leaves us with a net profit of $8,000 because we're going to take that revenue, subtract those expenses, and that gives us $8,000 of net profit in quarter two. Okay. Now, it can be most helpful to not only look at the profit and loss for one period, but to have a similar period to compare it to. So, for example, if you look at the monthly P&L for February, you might also compare it to January to see if you're getting more or less profitable. In addition, the P&L statement can show you more than just profit. Since it is broken up by category or of revenue and expenses, you can often get a sense of where changes in expenses or revenue are affecting your business. So let's look at a more detailed example from Luz's childcare business. Now here is her P&L for quarter one and two. By comparing the two quarters, she can learn some interesting things about her business. Now her revenue stayed the same for quarter one and two. However, her expenses went up by about 12%, actually by 12%, resulting in a profit that was 38% lower. So, looking at the expenses, she found that her rent and utilities doubled. So, she had no explanation as to why. And once she investigated, she found that broken pipe was leaking and running up her water costs. So it's very important to compare and contrast these quarter by quarter just to see where you stand within your business. It can be very helpful to catch things such as what we have displayed for you on the screen there. Now let's talk about the balance sheet, where the profit and loss was showing the performance of the business over a period of time, such as the year, the quarter, or the month. Balance sheet just focuses on the state of your business on a given date. Now, the balance sheet has three components. Those are assets, liabilities, and owner equity. Your assets are going to be cash accounts receivable, and that is the money that is owed to you. Liability is going to be overhead, debt, and accounts payable, which is basically the money that you owe to others. And the owner equity is going to be the total assets minus your liabilities, and your net value is what that is. So the balance sheet lets you know how healthy your business is, since it shows you a picture of revenue, debt, and how much money you are taking out of your business. The balance sheet gets its name from being in balance. Specifically, the owner's equity equals the total assets minus liability. And this is your net value. So let's look again at her balance sheet one more time. Uh, and in this case, she has a good amount of assets, including cash in her bank account and funds receivable. So she owes some money on her credit card and has a business loan. But even with those debts, she should or would still have to have about $7,000 left over in earnings. And that is the assets of 14,500 minus those liabilities of 7,500 leaves her with 7,000. Now, if you're asking which one should you use, the answer is both. The profit and loss, the balance sheet, and your cash flow statements provide a holistic view of your business's health. And you want to remember that the data is only as good as what you enter into your accounting system. So it's worth ensuring that you have a good record keeping system that you can rely on and trust. Now, if you want to learn more, you can go to the child care website, and we will send you a link there in the chat. So let's open it up for some conversation and questions. And we will go back through the chat to see if there are any questions that we can answer for you. And feel free to come off mute if you have questions as well. Also, as a reminder, we want to make sure that everyone here has entered their name and PDS number in the chat so that we ensure that you get credit for your attendance for today's session. See, I'm scanning my chat, trying to make sure that I have not missed anything. Morning, everyone. Perfect.
What type of bookkeeping system do most of you use? My QuickBook is up for renewal and it's $649. It goes up every year.
Great question. You all are welcome to either drop that in the chat or come off mute and share that information. Okay, so Jana says we use ProCare even for back end accounting. Latoya says she uses QuickBooks as well. So I'm looking, it's looking like ProCare and QuickBooks are the top two, Cami. I don't know if anybody else has something else that they're utilizing. Feel free to drop that in the chat. Come off mute and share.
Thank you, everyone.
And thank you for your question, Cami. All right. Any other questions in the group that we can address today?
I never really understood about the owner's equity, but I don't know, let me back up. My question is mortgage, where does that fall in with the talking about the balance sheet and the cash flow? Would it be put same place where you did the rent?
Yeah, if you're just counting what's coming in versus what's going out, if your mortgage is an expense, you're going to add that as a line item. So it would be rent slash mortgage for some people, and you can just erase rent. Thank you for your question, Cami.
Yes, Emily, I can hear you. Yeah, sure.
So Margaret, I'm not able to hear you, Emily, but I can hear you.
Oh, sure. So Marlene, if you did not select into the English channel when you started the interpretation room, then you wouldn't be able to hear Emily speaking to us as well. But she had a question from a Spanish speaking provider in her room who was asking for free apps or free software that's available to use for record keeping, for creating their profit and loss sheet. Does anybody have any recommendations that they use for free apps or software to keep track of that?
That's a great question. What we can do is take a look and see if there are any that we have a list for on our end. Free is going to be the challenge, but we're going to say if we can find any of that information. If there is anyone in the room who actually has or is utilizing something similar to that, feel free to come off mute and share that or drop that in the chat. We welcome that. And then I'm going to try to make sure that I can hear Emily. So, and it might have happened when I had to stop my share and come back. So I want to make sure that I can hear her. Let's see. Emily, can you hear me? Can I hear you now? Let's see if that helped. Yeah. Okay. I can hear you now. Perfect. Perfect. Thank you so much. All right. Well, keep in mind if you do have questions, we are definitely here to address those for you. I am going to show you a few more slides here with some information that we'd love to share with you. So we definitely want to thank you again for taking the time to join us for this webinar today. Before we close, let's take a moment to review what we've accomplished in our time together. So after today, we hope that you are able to understand the difference between cash flow, profit and loss, and a balance sheet, know how and when to implement each of these financial documents, and maintain the necessary documentation to support the upkeep of these records. Now, we hope this information is valuable to your business, and we look forward to seeing you, each of you actually, again in another Thriving Childcare Business Academy topic in the future. We do encourage you to visit www.bcal.georgia or ga.gov/thriving. And if I'm asking Margaret if you are able to, if you could drop that into the chat for us, for them to reference that. And you will also see that on a future screen, but you can use that. Thank you. Thank you so much, Margaret. You can use that to access additional resources and reference materials. Also, please feel free to join our small study groups. We have some great small study groups selecting one or more of the following topics. We have financial foundations, recruiting and retaining staff, mitigating risks, sales and marketing, revenue and streams of growth. And each topic includes 4 virtual sessions, each lasting an hour. An expert coach will work with you and your small group of peers and break down some key concepts. And then you will be provided with user-friendly workbooks for guidance and reference. Now, the sessions are centered on group discussion, best practices, and learning outcomes to support your business's growth and success. And once a topic is completed, you will receive 4 Georgia PDS hours as well as a $300 stipend. There is some information that has been dropped in the chat if you're interested in participating in the small study groups, and we highly recommend and encourage you to do so. Also, we have free one-on-one coaching available. We are coaching on the topics financial foundation, sales and marketing, recruitment and retention, and revenue and streams of growth, as well as mitigating risk. Feel free to scan the QR code on the screen if you are interested in one-on-one coaching sessions where we would dive a little bit more in depth in the information, anything that you would like to discuss as it pertains to the following topics. Also, we have free one-on-one tax education coaching. And this is where you're going to work with a coach to review your prior returns and identify any opportunities for overlooked deductions, and also to make sure that you have not entered anything incorrectly. Now, this coaching helps to maximize your tax savings while helping you mitigate your risks for an IRS audit. And Margaret has also dropped, I'm sorry, let me go back to making sure that if you're interested in the one-on-one tax education coaching, there is a QR code you can scan right there on the screen. And it will get you all signed up. Margaret's dropped in the chat that the small study group registration link will also allow you to register for these one-on-one coaching sessions. And then finally, we have our one-on-one coaching for ERTC and FFCRA. Now, ERTC, which is the Employee Retention Tax Credit, this is available to qualifying businesses who had W-2 payroll during the pandemic, and childcare providers still have time to apply for 2020 and 2021 credits. And coaches will walk you through the steps of determining your eligibility and how to calculate your credits and apply for this program. FFCRA is the Family First Coronavirus Response Act. It's another pandemic-related credit. This is for sole proprietors or businesses with W-2 employees as well. Our coaches can also walk you through this process and determining eligibility and filing for that credit. If you are interested, you have a QR code on their screen that you are more than welcome to scan, and that will take you where you need to go for that. So we want to thank you once again. For more information, you can visit DeKalb's Thriving Childcare Business Academy website. It has been provided in the chat for you. It is decal.ga.gov/thriving. There you can browse our entire library of self-study guides on topics related to your childcare, learn about and register for any upcoming webinars. We will be doing 2 a month throughout August 2024, and register for our small study groups. These study groups are capped at 10 participants and are a great opportunity for you to take a deeper dive into topics that are relevant to running your childcare business right now. The small sizes in these groups are definitely going to allow you to get more personalized help on issues that are affecting childcare businesses. And you also get 4 state-approved training hours, not to mention the $300 stipend for each small study track that you successfully complete. All right, that is everything that I have for you today. So I will stop my share